From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming August 15th Forex session in the Euro US dollar. As you can see, and I am recording this about an hour before the daily close, GMT, you can see that we definitely had a bearish session on Tuesday. Initially, we did rise and we did peak over the vital 123.50 level, which, as I draw this line, you can see that it has been an area that's been supportive and resistive several times since end of May. And as such, every time the pair gets near here, you pretty much have to pay attention. But you can see that we failed and we formed a shooting star. And anybody who's been watching our videos knows that I'm very bearish of this pair. And in fact, recently have started to contemplate the idea of a rising wedge, which is bearish as well. So now this leads to an interesting setup. We obviously have a downtrend. We obviously want to sell the euro as opposed to the dollar, but the question is what's our trigger? And there's a couple different ways you can go about this, and I'm thinking about this in two different ways, really. There is the standard trigger of you break the bottom of a shooting star and you just go ahead and sell. But with this rising wedge, there could be something to be said about this uptrend line. Perhaps we break down a little bit and then bounce up higher. Now, personally, I don't think we get above 125 without some kind of major catalyst to push the pair higher. So, having said that, there's a couple different ways. Like I said, you can approach this. You can be aggressive and you can short it, or you can wait until we break the rising wedges uptrend line, which is a more conservative way to do it. And you can even maybe get a little bit more conservative than that and wait till we break the bottom of this hammer, which would clear the line, the shooting star, and break this little bit of support that we see here, and really give you no reason to think that the pair wouldn't continue much lower. The trend is definitely with you. So obviously, this is, I don't want to say it's a low risk trade, but it's a lower risk than buying. And although we have seen lower high or higher lows recently, which is the meaning of an uptrend. I mean, when you look at the overall chart, this is still a pullback. I mean, we had that happen previously. As you can see, all these lows were getting higher and higher, and you can see what's happened there. The situation in the EU hasn't changed much at all, and while the politicians are breaking their arms trying to pat themselves on the back, the truth is the markets are starting to get fed up with this. Truthfully, the only reason we haven't really seen the euro get punched recently is that most of the traders aren't there. The real truth will come out in September. Once the liquidity picks back up, it'll be interesting to see how traders treat the Europeans, who simply seem to be taking their time. They don't really seem to grasp the idea of how quickly things can go bad. And now it appears that France may be the next country to get involved. If France gets involved in the sense that it becomes a problem like Spain or Greece has, that's huge. So I just see too many reasons not to own the euro, and as such, I am only looking to sell, obviously. And again, for myself, I'm going to go ahead and wait for the uptrend line to get broken to the downside. But for those of you a little more aggressive, you can probably sell on a break of the lows of the day. Or for those of you who are a little more cautious than I am, wait until the break of the hammer. But either way, we have several different ways to get involved. And they all tell us the same thing. They all tell us to sell.